Hello, trading is closed on May 13th, 2019. Go over calls in just a minute. First, I have a correction to make. About a month ago, someone sent me a private message about the AM+3 signal. I gave them my book, and I was working on something else at the time, and I just gave them the wrong answer. And it just hit me yesterday. The answer was completely wrong. If he wants to send me another private message, I can reply to him. Okay, well, that's my mea culpa. Let's go over the calls. We hit a target, and that was hit. We had a call. The odds favored a quick move outside the day's range. I said a gap outside the day's range. We gapped and probably took out the low. That's close enough. I said that this was a buy signal of somebody else. We had to confirm it by taking out this high. I said if we gapped over the high, we had all we needed for a low. We took out this low instead, and buy signal or not, potential for a crash was present. This was the pattern with the early high. Usually, it leads to an all-day rally, but if it fails, it drops in a straight line just like that. It should lead to more weakness unless we gap tomorrow over this high, which looks unlikely as I'm doing this. I also said that this action is going to be determined not so much by the technicals, but by what happens in China. We'll never know what would have happened had there been a deal on trade with China. My suspicion is he might have gone up just as dramatically as we dropped, but we'll never know. There's a deal made overnight. Who knows what will happen? During the day, the market said ultimately both lower and higher prices would print. We got the higher prices, haven't gotten the lower prices. Here are the targets. This one's most likely to print before tomorrow's close. This one has no time limit, but usually we get more than that. It implies more downsides coming. Tomorrow's pattern is the one with the early high. Doesn't mean you won't gap down first. Well, let's take a look at the general long-term picture. Here's my long-term count. It's possible to count this whole rally as being over. Because I have higher targets, I think it's more likely the end of wave 1 of 5, but you won't know for certain unless this low is undercut. Here's a close-up of what we think is going on. Looks like you've had 5 waves up completed and then an overlapping decline, which should be a correction of this wave if it is wave 1. We hit an alternate count of 1, 2, 3 with the decline stopping on top of this alternate 1 and then rallying, but that's invalidated because we have an overlap. So now we have greater confidence that the count of 5 waves up is the right one, and we're in a correction of that advance. If this count's right, and we won't know if it is until it's too late, then that's A and that's B, and we're in C, and C doesn't look like it's over. In fact, because of the steepness of this drop, certainly would explain a drop of greater magnitude. Of course, it's not the only count, and if a deal's made tomorrow and we gap up, I'm certain there's some other way to count it. Here's a bar completely under the lower Bollinger Band. It shows we're extremely oversold. Now, oversold readings at the end of a long decline are pretty good at marking lows. It means everybody wants out, and when everybody wants out after a long decline, it's usually the end. But when you have oversold readings near a top, it means everybody wants out near the high. and it isn't really a sign of a long-term low. It's a sign of more trouble. It's a sign of more trouble coming in general. This is the greatest crash in history. You'll see how infrequent, let's say one of the greatest crashes in history. You'll see how infrequent it is to get a bar completely under the lower Bollinger Band. This is like a 22% drop in a day. We have one bar under the band, one bar under the band, and that's in the 87 crash when the government had to intervene because nobody wanted to buy stocks. 2 in a row under the lower Bollinger Band may have a precedent, but I can't find it. Nope, I skipped one. This is Bollinger Bands at 3 standard deviations. You'll see the standard Bollinger Band is at 2. This is at 3. You'll see how infrequent it is to trade significantly that much beyond the bands. I mean, you can go back a long period of time, even in the earlier drops, it just didn't last very long. So it's not really a signal to buy, really, but it's caution for anyone who wants to initiate a short position here that you're so oversold that oversold rallies are quite possible, although I don't have any signal of one at the present time. This is the E-mini continuous contract. You'll see how volume spikes correlate with market lows. The volume is actually, I think, higher than this because the E-micro contract traded, and some of the volume that would ordinarily go into the E-mini has gone into the E-micro, which is a successful contract so far from what I understand. So we have extreme oversold readings on the one hand, and on the other hand we have a wave count and a panic selling near a high, each of which is compatible with more lows to come. It just suggests at least maybe they won't come in a straight line, but it certainly isn't a guarantee. What about tomorrow? If we don't go over this high fast by gapping up, and again, if there's a deal with China, who knows what will happen, then lower prices should print. Here are the targets. But when you're that oversold, the risk of a rebound is a real risk, which makes this hard to trade. Longer term, we have a higher target in futures, plus we have a 3-leg Fed whipsaw, which usually plays out, each of which, in addition to the good breadth at the high, there's normally bad breadth at the high, in addition to which suggests that after a big drop here, and it still could be pretty big, we should have a complete recovery to new highs. Now, how much could we drop? Well, I don't really know for sure, but I will tell you that there were a lot of unfilled MEJT targets in 2017, and eventually all but 3 of them printed of about 650. There were a lot of unfilled MEJT targets in 2018, and they've all printed. So in 2.5 years, we have 3 targets which were never seen. Now, these targets. This one's from a system which wasn't in the book. But we still have all these targets, and the odds are that most of them will print at one time or another. The system was developed in 2002. There have been plenty of years where every target was hit, and usually we average about 2 or 3 targets a year which don't print. So the next targets are over here. We've got some in the 2700s and some all the way down in the 2500s. Again, if a few of these don't print, it isn't the end of the world, but it suggests we have more downside to come, even if it doesn't come right now. But right now, seems like the most logical time. So tomorrow is going to be a challenge, I think. Lower targets, too oversold in my book to initiate a new short without a good stop. Strong potential, we have a rebound at some time, and even if we trade lower, it wouldn't surprise me if we closed up just because we're so oversold. But I don't think this decline's over, and I don't think the whole bull market's over either. That's today's call.